Hi, this is Joe Rabil from Rabil Stock Research with your Daily 5. So I thought it would be worthwhile to take a look at the technology stocks based on how far many have dropped over the last few months. For those of you who don't know, I'm a bottom-up technician, so I reviewed 600 tech stocks this week to get a feel for the overall sector. Now, I mean, a lot of people like to look at the ETFs, the major sector ETFs, and I look at them as well. And I think it's important to keep an eye on that. But we have to recognize that this index is being influenced by probably the top 5 or 10 in the index. And so that's why I like to look and see what's really taking place, going under the hood and going through a lot of different stocks. So for today's Daily 5, I've got 2 good stocks, 2 bad stocks, and 1 ugly one. And I'm actually going to start with the ugly because I want to show essentially what I think is very important about what's going on in technology. So we have a lot of, so this is Autodesk, ADSK, and I think we have a lot of stocks that are in the technology area that are in this position right now, which is broken, headed south, really coming down and getting oversold for sure, but still having pretty strong signs of momentum. And if we look at the ADX on the weekly chart, we can see the ADX is rising at 42, very strong, no real sign of let up in the sellers based on the red DI. Look at the MACD continuing to move lower. Now, it is getting oversold, no doubt. And the stock is starting to come into what I would consider to be a bigger support area. Now, I can go through and look at a lot of different stocks in technology, especially in the software area, that have gone through this type of a decline. So before I can look at the good stocks and figure out where I really want to kind of place or start to place bets in those, I really want to see some type of a climax take place in some of these really ugly ones. The ones that have broken, not just broken down, but look at how we broke here and then rallied back, failed right at the resistance zone, and then had a really nice leg to the downside. Now, again, we're coming into support here, but what I'm looking for is some sign of climax to take place, either a volume explosion, some type of divergence to take place, some type of a reversal to give me some confidence that suggests that these stocks aren't going to continue to anchor the sector to the downside. So before I can really get aggressive on the long side and buy the stocks that are the good stocks that look attractive, I'm waiting for signs of a bottom in the worst looking names, the ones that have really been beaten down. And I don't see that yet. I don't see the volume explosion. I definitely don't see momentum divergence. We've got really strong momentum characteristics in place on the daily and the weekly. And one of the simple things you could do is just draw on a steep downtrend line on the daily chart and look for signs of some type of a reversal to take place off the daily. We don't have that taking place yet, so you have to be very careful about buying the really good-looking stocks right now because they could be subject to a markdown phase if the group gets another big drop here anytime in the near term. So just have to be aware of that. But I do think watching stocks like Autodesk, the Match.coms, the Twitters of the world, stocks like that have really been beaten down, we're looking for signs of either momentum divergence or climax. And then I think we can start, not to say that we want to necessarily buy these stocks, but we want to buy the stocks that have held up. But we don't want to do that until we have a real sign that the group might be making a bottom. Let's go ahead and start looking at a couple of these good ones. So Juniper, I think, is really impressive. If we go and look at this monthly chart, look at how it broke out above this 30 level. And based on, even though the group has really been hit very hard, we're really not even pulling back. It's just kind of holding sideways. I mean, something definitely looks like it's going on here. Really attractive. Now, if we do go through a little bit of a markdown phase where some of the big stocks, like let's say Microsoft or Apple, get hit a little bit, or maybe even Google, we could see the whole sector drop, and that could drop this down, and it might even overrun this 30 level a little bit, but that wouldn't bother me that much. I think this is setting up to go higher at some point once the group really solidifies a support. So I'd be watching this. I'd have this on a watch list, watching it very closely. The momentum conditions are very good in this. The overall price and volume action is good. The relative strength is obviously good, and it should have pretty good support around 30.31. If we look at Jack Henry, sort of similar conditions, but let's look at the weekly on this one. So we had the harsh decline that took place in July last year, and then it went through this basing stage. And now while the rest of technology is really getting battered, this is actually resurfacing again back to the upside with pretty strong and key support right in this 180 area, 175, something like that. So as long as we can hold in that general area, I'd say right around 170. Again, it could bleed back through support if a group gets hit really hard, if the sector gets hit hard. But I still think this is a one to watch because of how strong it's holding up right now. We can look at this from a relative strength standpoint and look at what this is doing versus the S&P. Not even the technology. It's doing better against technology, but it's really doing well against the S&P. So I like to look for that. I like to look for the combination of relative strength, momentum, potential, pretty good improvement in the momentum off the daily chart, and then relative strength. Let's look at a few what I would consider to be bad stocks. And what I mean by this are stocks that are fresh breakdowns. And what's concerning me about something like Lam Research is that we have the applied materials and stocks like that, which were holding up really well. They were kind of like the last ones to break. And the semiconductors, generally speaking, I think have looked pretty attractive. What I would be really concerned about is if we get the same kind of rally that ADSK got, which was this little kind of half-hearted rally back into resistance on something like this LRCX. Because we have a clear breakdown level. If we rally back to the underside of that and fail, then we might be in for another leg to the downside because we have some open air here. Look, there's not a lot of support underneath right now. So if this can't turn from here with a vengeance, we want to see a pretty good rally off the low and get back through this area. Because if we don't, and we just rally up half-heartedly, then we have to start thinking there's a bit of an air pocket to the downside in a stock like this. So something we've got to watch really carefully is how this rallies off the low. If it can get a good rally here, then it might be able to stabilize. But just generally speaking, the overall conditions here are not very good. Let's look at Mastercard because this is from a bigger picture standpoint has been a big winner for a long time. You can see how this has gone up and up and up, but the relative strength, let's look at this relative strength line. The relative strength line really started dying out almost 2 years ago. Even though this continued to climb to the upside and then made a last gasp effort here back to 450, it just couldn't get through it, and now we've had a real hard decline. So if we take out these lows here right around the 300, just above 300, I would be very concerned about the long-term trend. If you notice, we go back and look at the monthly chart, the 18-month line has flattened out, but it has not rolled over yet. We're in a transitional phase in this. It's no longer in an uptrend. It's in a neutral trend kind of working sideways. But if we're going to get a turn down, I think this 18-month needs to roll over. I don't like the look of the momentum conditions. I mean, we can see that momentum hasn't been confirming on the monthly chart for a while, but now on a weekly basis, It's not confirming. And we've got red DI to show up here recently. See how the sellers are started to pick up? That's the first time that's happened in quite a while. So we have to be concerned if we get any more follow through to the downside in this area. So I would continue to stay focused on what's taking place in the uglies, okay? The stocks that have really been beaten down, see if we can get a climax to take place. I think that's the highest probability right now. If we get a rally and then we come back down, then we could see divergence take place, and that's where you could also get some kind of a bottom to form. We're in the general area, we just don't have the price action to confirm yet. So be on the lookout for that. So that's the end of your Daily 5 today. I hope you enjoyed this segment. You can contact me through LinkedIn or find my research on rabilstockresearch.com. In addition, if you'd like to learn more about trend, MACD, and ADX in multiple time frames, I have a YouTube channel and a book called Invest Like a Pro, which delves into this subject. Have a great trading day, and I'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.